All right. Hello, everyone, and welcome to another episode of Bitcoin Brief with your host, Vays. And I am joined by the one and only Jimmy Song on this Tuesday, August 18th. How you doing, Jimmy?
I'm doing great. Feeling like $1,000,000 after actually like having rested a little bit. Uh-oh. What happened? Tone?
First two sentences, then lost your audio, but now it's back. Okay, good. So I hope you're doing well. I didn't hear any of what you said. For some reason, my speaker was not working at all during that moment. But anyway, we are almost there for BitBlock Boom. Jimmy and I will be in Dallas, Texas for BitBlock Boom at the end of this month. So come out and join us. All right, we got a lot to cover today. A lot of it is also going to be, let me mute this and then check it. Let's do a couple of house cleaning. Let's do some follow-ups on a bunch of our recent stories, and they can all be summarized by this image of the beautiful dumpster fire. And this is, of course, from the headline of the recent YAM situation, which was a 2-day protocol. But for some reason, when you pull up the article, that lovely picture is not in the article, only in the metadata. So we have to do it this way. So just a quick follow-up on YAM. It was a 2-day decentralized, wink, wink, cryptocurrency called YAM that collapsed on Wednesday after its creators revealed that a software bug had effectively vetoed human governance. So once again, this is an example of a crypto project that has all the inefficiencies of a blockchain and decentralization, while also none of the efficiencies that they think they have as a centralized protocol. So they are still centralized, but they can also be completely destroyed. This particular article simply points to their one-line error where they forgot to put a .div parentheses base in that function. Jimmy, you want a quick comment on that? I don't think we're ever going to be talking about YAM again, but it's kind of funny when you go through it. Here's the CEO and the creator of YAM. I'm sorry, everyone. I failed. Thank you for the insane support today. I'm sick with grief. So the protocol in 2 days made it to a market cap of $525 million and then fell to $29 million. And the article rightly points out all the tokens combined were 29 million, but there's nobody there to buy them, which is perfect. Give it another week or two, and there'll be plenty of suckers out there willing to buy this. General thoughts, and then we're going to move on to our next dumpster fire.
Yeah, the quote there is hilarious because it says, the project's GitHub repo states explicitly that there's been no audit of the code. And this is very obvious because they forgot to divide. And that made it so that there is no way to get the money back. You might have as well have burned a bunch of, I don't know, I guess it was Ethereum or whatever it is that whatever money that you put in there, you literally just burned it. There's no way to get it back. I suppose there is a way. And I bet that's probably why it has at least a little bit of value, which is that the talent might bail them out. It doesn't seem very likely right now because it was such a small part of the Ethereum ecosystem compared to, say, what the DAO was. The DAO was 1/6 of the entire Ethereum ecosystem at the time that it happened. So, they still haven't done anything with the parity stuff. But yeah, this is what happens when you have a complicated smart contract language and you make a mistake, all your money just gets burned up. It's like Tone said, it's got all of the disadvantages of decentralization and all the disadvantages of centralization. So your chances of screwing up in a spectacular fashion as to cost everybody money is very high in situations like this.
Okay, our next dumpster fire on the docket does not yet have any articles written about it. And this is not a show that breaks the news. This is a show that evaluates the news. But here we have Dead at Linux, who is Emersa Shea, correct?
Yeah, Anne-Marie
Okay.
Yeah.
That's Anne-Marie Sachet, and he is the man in charge of coding the Bcash protocol, or is he Bitcoin Unlimited or Bitcoin ABC? I always forget.
It's Bitcoin ABC. You could see it in the GitHub repo thing at the top.
There it is. Yeah, you're right. You're right. It's Bitcoin ABC. That's right. And so where are the other two idiots? And I do call them idiots because I've seen them present and at Scaling Bitcoin, and I was the least technical person in the audience, and even I said, "What the fuck?" To the technical stuff they were talking about, and that would be
Peter Risen.
Peter Risen. And
he's Bitcoin Unlimited, and somebody else from Bitcoin.
Yeah, what was his name?
I don't remember.
Oh man!
But Peter Risen's the main guy, I think.
No. But he's not the main. He's not the lead developer. Was the other guy? Man, oh, I forgot his name. I'm sure you guys in a live chat will remind me. Oh God, this is gonna bother me the rest of the show. All right, hopefully somebody will say it. Okay, so he created a pull request to take that 8%. So 8% to the miners, from the miners, to the developers of Bitcoin ABC. So does this mean that he is going to leave Roger and he's part of the Bitcoin ABC that's going to join via BTC's fork called Bitcoin Cat? Like what?
No. It's actually the other way around. He's the one that input this into the Coinbase rule, and via BTC is saying this doesn't go far enough. I think because he was the one that tweeted a while back, "Hey, they're going to fork off of what we're doing," and I don't know. Maybe there's a third one that'll appear, but this is. 8% of the Coinbase goes toward an address. This is not Bitcoin Cat. Bitcoin Cat is launching November 15th. This got committed 3 days ago, so it's fairly new. Not that many people.
It got committed. It got committed.
Yeah, it's in their code base, so it's in there.
So they're taking the 8%.
I'm not sure. I haven't looked at exactly when the 8% starts, but I'm sure there's.
But it will start automatically. But it's definitely starting.
Well, so the thing about Bitcoin Cash is that they hard fork, and in order to add this 8% Coinbase toward a given address, they need to hard fork in order to make that happen. That means everyone has to upgrade in order to agree to that, including the miners. Whether they will or not is kind of an open question at this point. I mean, this is the balkanization of BCH. It's split once already with Bitcoin SV. It looks like it's going to split again with Bitcoin Cash.
Holy shit! So
there's probably several others.
Wait, so this thing can split 3 ways now coming up, right? Because via BTC is splitting off, and then this hard fork for the 8% could cause another split.
We don't really know, but I mean the people on our BTC are unhappy about it, which leads me to believe that they're probably going to do something about it. I suspect Peter Risen has something to say about it because I don't think he likes this rule, and he's clearly not with via BTC. So
is it Andrew Stone?
Oh yeah, I don't know, but this is going to at least cause one split, and that's the Bitcoin Cat thing. Will it cause a second split within the BCH community? I'm going to guess yes, but who knows? They came up with a compromise last time with some sort of like money raise for BCH developers, but he added this back. I'm not sure what precipitated it, but there's a bunch of people talking in that community about it. I mean, this is balkanization, and when you can hard fork, you're always going to have situations like this.
But here's the crazy part. Like I was Googling to find the story on this. No one written about this. So that literally means one of two things. One, they're sneaking it in there, or B, which is the preferred conclusion, no one gives a shit about Bcash, that no one even wrote about this. Everyone is writing about YAM, and YAM is more important than what's going on with Bcash.
Yeah, I'm not sure. I think it's fairly new. I do know that there's at least one thread on RBTC about this. I haven't read it yet. I don't go there that often to look at anything. So, but I mean, the pull request has been merged, so it's in the Bitcoin ABC client. What happens with it, we don't know.
Here's the best part. So if Bitcoin Cat actually happens with Via BTC forking off, and then this disaster causes a fork itself, and whether they happen on the same day or within a few weeks of each other, I don't understand what exchange in their right mind is going to keep this insanity of BCH trading on their exchange.
Well, I mean, not just that. Think about all the engineering time that you're going to need. You need to run multiple clients, make sure that they're following the rules. You might even have to audit their code base. Who knows what malware, they might sneak in if you're a fork and things like that. So, the serious amount of time and energy that you need to put in is going to come to bear. And if you do it wrong, then you might lose a ton of money. So you need to do it right, and that's not easy. And I suspect a lot of these exchanges, they're going to have to pay that cost. I mean, they were complaining about the Ethereum hard fork back in December. I imagine this is going to be very similar, except you now have to list another coin on top.
All right. Well, good luck to you if you are running a crypto exchange. Okay, staying with dumpster fires for 300, we have apparently another attack in the Ethereum Classic network. No reason to get into the story. I'm sure it was just as complicated to pull off. Laughing.
Well, no, it was the same. It's the same attack. It's the 51% attack that we talked about last time. And
right, but they're saying there was two of them.
Yeah, there were two 51% attacks. The story that we discussed last week was, I think, talking about both of them. I'm not sure.
Okay, because this article is very, very recent. It's from 2 days ago. But this is what I couldn't stop laughing hysterically for about 5 minutes. I don't know if you've seen this headline in Cointelegraph. Wait for it. There it is. Ethereum Classic's leadership says they don't need a Charles Hoskinson's bailout.
Well, I guess Hoskinson was involved in the creation of Ethereum, so maybe he feels like it's one of his children or something.
Well, literally, because he was also a big proponent of Ethereum Classic, because he thought that the bailout that Ethereum did was insane, even though he wasn't involved with Ethereum at all by that point. But I just want to read the first couple of parts. Cardano ADA founder Charles Hoskinson recently offered to help the troubled Ethereum Classic ETC community, but it came with a major condition. The community would first have to institute a decentralized treasury system. It gets better. Feel free to laugh, though. Similar to Hoskinson's Cardano and many other blockchain projects. If the community did not accept his terms, Hoskinson felt like his help would have been a waste of time and money. It's not worth my company's time. So here he's being quoted. It's not worth my company's time or our strategies to pivot for a grant or a one-off payment to go and bail us out. Oh, sorry, that's not his quote. It's, well, actually, I have no idea who's being quoted. Anyway, if there is a treasury system, it means that I can be in the business of building open source innovation and open source software and bringing these things to market and be paid to do that patent-free and open source. Again, nothing says decentralization in the crypto space than these two paragraphs and that headline. Now, I don't know if Cardano, the completely centralized protocol, is going to be bailing out Ethereum Classic, the completely centralized protocol, with all the downside of a decentralized blockchain as presented in the 51% attack. Charles Hoskinson may be interested in bailing them out personally. And I don't know if you've seen this clip, Jimmy, but I don't watch it or play it enough times. And we do have 300 people watching, and I hope the audio comes through nice and loud. And this is thanks to the YouTube channel 1000X, who also did the song with Novogratz and myself, Bitcoin, please go to moon. So go ahead, guys, and have a listen.
Charles, when people ask you, what business are you in? What do you say?
I used to say I print money for a living.
Did you hear that?
Yeah, it's actually true. I mean, he's letting slip a few things. I think he was talking about, well, if you go back to the article, the part of the quote that's hilarious to me is if you go down and go to the quote that you were reading. Yeah, it's not worth my company's time or our strategies to pivot for a grant or a one-off payment. Basically it's never like Hoskinson felt like his help would have been a waste of time and money. It's been a waste of time and money the entire time, right? Cardano, Ethereum, all of this stuff that he's built, he's far too talented to waste his time on this crap. And the fact that he is just tells me he really is just printing money, and he's playing the zero-sum game where he could be actually contributing something interesting. And that's what really gets me about this whole saga is that, he's trying to gain credibility with Ethereum Classic people, I guess, or something like that. But really, he's wasting his talent. I know he's a good coder. He's done some things, research-wise that have merit. The fact that he's wasting his time on this crap is very sad to me. And this doesn't just go for him, but for a lot of professors that have launched their own coin, thinking that they're actually contributing something. And just straight up, you're not contributing anything. What you're doing is wasting everyone's time, confusing the market, and making innovations that nobody wants. And that's the sad reality of all of these guys.
Yeah, but this is the confusing part about the quote, and that's why I got so confused. It's not worth my company's time or our strategies to pivot for a grant or a one-off payment to go and bail us out. Well, I don't understand.
Yeah, I'm not sure who's saying that. I guess that would be somebody from the Ethereum Classic side, but
maybe
what company is it? Barry Silbert's company?
I mean, it is Cointelegraph, and I know what kind of writing they because I've actually used to work there. You know how my spelling is, and I think this instead of us is supposed to be Ethereum Classic, maybe.
Yeah,
well,
maybe them. Yeah.
Maybe.
But I mean, I don't know what the company would be if it's Ethereum Classic. I mean.
Well, right, and I don't know what company this is.
Yeah. That's why I think it's probably just them, not us.
But this is the thing, right? Like, I don't understand how all these guys are talking about their companies while at the same time going on camera with a straight face talking about how they built a decentralized system.
Yeah, this is the double think that they have to do in order to keep up appearances, I think.
Right. So speaking of non-blockchains centralized system, now we're going for 400, and we're going to talk about Ripple. We have not talked about Ripple for a while. We have to poke a stick at the Ripple army of the brain dead, and here we go. We got a bunch of little headlines here. So this is what kicked off the need to talk about Ripple on this here show. Investors are looking to offload Ripple equity below December's $10 billion valuation. So Ripple, the corporation, Ripple Labs, got evaluated at $10 billion, which is insane. But in any case, so here are the relevant parts. A source that wishes to remain anonymous tells BTC Times, which I didn't even know existed, that at least 2 investors in Ripple, one being an early stage investor, I thought it was something about one being American, one being Chinese. Oh, there it is later. Okay. Are looking to exit their positions below December's valuation. Okay, actually, I should have read this part. These 2 blocks are purportedly being sold by an American investor and a Chinese investor at 35 to 40% discount to the valuation given to Ripple Series C round investors. This implies that the company has an over-the-counter valuation of $6 to $6.5 billion, which is still many $billion too high. Now, I had no idea that Ripple borrowed money in a C round. So Ripple apparently got $200 million in a round C, while they still hold 50% of all the Ripple tokens, right? And then later in this article, it's talking about how Ripple is considering going IPO. So they're literally triple dipping into freaking. This is insane. Like, I don't understand how the SEC has not put all of these mofos in handcuffs yet, because this is ridiculous. So here, speaking to a Wall Street Journal at the Economic Forum 2020 in Davos, Garlinghouse, it's said it's a natural progression for Ripple to become a publicly traded company. Garlinghouse added that he wants the company to be on the leading side of cryptocurrency firms going public. Compound's general counsel, Jack something, has suggested that due to the uncertainty about regulatory status of the XRP scam, an IPO may take place at a later point in time. I'm sure Ripple is thinking about the IPO like many Series Cs. I just doubt it will happen while XRP's security status remains uncertain, that it's not FUD as basic business sense. So basically, first they print 100 billion Ripple tokens. Each Ripple token is a quarter of $1 or thereabouts. So that, I'm just doing the math in my head. So that means it's about, they printed 100 billion of them. So that means Ripple's market cap is 25 billion, and they have half of that. So they are sitting on $13 billion in Ripple token. So the fact that their valuation is only 10 billion, it means that the market sees this token as an outright scam, because if they're sitting on $13 billion worth of the Ripple token, why is the whole company only valued at $10 billion, right? And these guys are trying to sell it for $6 billion. Anyway, let's move on to other recent headlines. So Ripple loves to promote the fact that they have a deal with Santander, but guess what? Santander doesn't want to use Ripple for international payments. And so Santander has two products. One is called OnePayFX, and the other one that they were going to be launching is called something else. Maybe it's in a different article. And they are not using the XRP token in any way, shape, or form. In fact, over the last few years, Santander has gone out of their way to make sure everyone knows that they are not using the scammy XRP token, because they know how useless it is. So here, despite being touted as one of Ripple's largest, most important customers, the major Spanish bank Santander is still hesitant in its approach to the Ripple-affiliated XRP token, because they're smart enough to know what a scam the XRP token is. So here, I don't know if you want to comment on those other two, but let me just read this, because I have unfortunately, three other Ripple headlines. Here, so Ripple, so here's Ripple, right? So they printed billions of dollars worth of the token, which they still hold. They are raising money from dumb qualified investors after raising money from dumb unqualified investors. Now they're thinking about going IPO, and in the meantime, they are investing in other companies. So they bought a shit ton of MoneyGram. They bought $10 million worth of MoneyGram stock, and basically are a major holder of that company. And they're supposed to buy 20 million more dollars, or 20 million more shares. I'm not sure if it's in dollars or in shares, but I think MoneyGram shares are less than $1, so it's about the same. Anyway, so they have other investments. So here are some of Ripple's investments. You're going to love this, Jimmy. Among these new projects is also the content monetization platform Coil. Have you ever heard of Coil?
Nope.
Perfect. Which Ripple handed out $260 million to with most of the funds earmarked as grants to attract content creators to join the platform. Now, after a year of running Coil, the platform appears to be generating little revenue, with one writer on the platform saying the payments he had been able to generate for attracting readers only made up about $15 since the start of the year. This article was just written, by the way, so it's August, okay? Although he had received over $2,000 in Ripple from Coil as an incentive to keep writing on the platform.
Yep, sounds exactly like the block stack thing that we covered a while back.
Right.
But basically, these guys can't get anybody to join their platform to use it, so they basically have to bribe them. That's what it is.
All right, here's one more of their investments. Meanwhile, in related news, Ripple's partner Flare Networks released this week that it is launching a new token that XRP holders can claim at a one-to-one basis. According to the announcement, the Flare Network CEO, Hugo Philin, the new tokens, dubbed Spark, are designed to enable smart contract functionality. Sorry, I'm retarded. Functionality for Ripple users. So these are the kinds of projects that Ripple is investing in.
Yeah, and just to go back to the previous two stories, and Ripple took the money back in December, not because they needed $200 million. They can sell a very small fraction of their coins and still get $200 million. They did that for legitimacy. They did that
Right,
so
they did it for credibility.
that they would have more people advocating for them with the SEC and things like that. That's why they did that. They thought about like different ways that they can use their war chest to make themselves a legitimate company, and this is one of the things that they came up with. They've also come up with lots of other things, like trying to convince people to use their rails for international remittances, buying MoneyGram and things like that. None of those things have actually done anything to make Ripple a profitable, viable company. The only thing that actually makes them money is selling XRP tokens. And you mentioned that they're probably worth somewhere, or their XRP holdings, at least mark to market, it's something like $25 billion. But the entirety of XRP is worth about 30 billion in market cap if you include the portion that the Ripple company has. So their portion is somewhere between 10 and 15 billion dollars, and that's obviously a lot more than the 10 billion that they were valuated at in December. So why are they why are people willing to sell at a discount? The reason is because their token is not that liquid. You can sell, the volume on a day-to-day basis seems kind of high, $2 billion, right? But you add, you sell even a billion of that, and that will tank. That price will tank significantly. So by the time you get rid of the 50 billion Ripple or however much it is that you have in your treasury, that price is going to go down to fractions of a penny, and that's what everyone knows about XRP, and that's why a lot of these investors are like, okay, they don't have anything other than the XRP token, and you have to discount that based on the lack of liquidity. I mean, a lot of other tokens have better liquidity than XRP. Even like Chainlink has better, better liquidity and so on. So you have to think on those terms.
Right. So here, if you go to CoinMarketCap and you actually look at these tokens by total supply, you will see that Bitcoin is number 3. So, so this is how you really want to look at a lot of this garbage, is by total supply. So you can see how Ripple's total market cap is $30 billion. Not 13 billion. And that means that Ripple, the company, has $17 billion worth of Ripple tokens. We also have Electronero Pulse as the #1 market cap coin in the world, with looks to be about what's bigger than a trillion?
Quadrillion.
Right. 1.2 quadrillion in coin market cap.
which is honestly more than all of the fiat money that exists today, I believe. Which
Yes.
This is all USD, all yuan, all
Yeah.
So I mean, there's obviously no liquidity on the Electro Nero. It's $82,000 trade a day. So that tells you that it's not worth that much. It's
And
just,
RSK is number 2. And then you
no,
have
it's the smart Bitcoin. So I think, and if you look at the total supply, it's like 21 million.
right.
I think it's like some synthetic Bitcoin basically on RSK
Right.
somehow.
And then you have the Eco Dollar and King Money, and then you have Ethereum and Ripple. And the thing is, like, here's the thing: all this shit, it's all the same. It's all the same, guys. There's really not much of a difference between King Money and Ethereum. There really isn't. At the end of the day, they're gonna end the same way.
Well, King Money has less liquidity than Ethereum. I mean, the thing that you need to take into account is the liquidity of your token. And XRP traditionally has not had very much liquidity ever, in large part because of its enormous 100 billion XRP supply. And that's been the case for a very long time. That will continue to be the case for going forward.
Anyway, we have other headlines here. They're all in the video description about the stupidity of XRP. We have one here. We also have one here that really points out how no one is using the XRP token in the actual traditional finance world, and how silly it is because it's a utility token where in order for it to be utility, the price has to be as low as possible, but you have a bunch of dumb speculators that want the price to be as big as possible, and the whole dynamic makes no sense. The last thing about Ripple. So this is very difficult to find on the internet, by the way, Jimmy. This is basically Ripple's white paper, or Ripple's equivalent to a white paper. It was published in 2014, and it's very difficult to find. I need to put it on my website. And it literally talks about Ripple and Ripple, the company, Ripple, the protocol. And I don't want to waste too much time on this. I just want to read a couple of things from it. I think I made a note in my head to go to page 15 because I only care about the scammy Ripple token. I don't really care about what else they do. Page 10. Where are we here? Here it is. Ripple currency. So off the bat, they are admitting that it's a currency. So they printed their own money. The Ripple protocol has a native currency called XRP, sometimes referred to as Ripples. Again, 2014. This is their paper, which performs several key functions within the network. XRP, like other digital currencies, is a math-based currency, also known as a cryptocurrency, which is a digital asset with variable mathematical properties. Just like Bitcoin exists natively on the blockchain, XRP exists native on the Ripple network as a counterparty-free currency. Unlike the Bitcoin protocol, however, Ripple users can opt not to use XRP as a medium of exchange. Instead, XRP performs two key functions within the network: protect the network from abuse to provide a bridge currency for market makers. Anyway, this thing goes on, but it tries to convince you that Ripple, the token, is needed to secure the Ripple network. Does that make any sense to you?
Not at all. People like creating tokens because it gives them the power of money printing. To justify why you need to print the token is almost always a level of mental gymnastics that really boggles the mind, and it's not rational in the least.
Right. So, wait, there was one more part. I don't know if it's on this page or on page. No, it's on a different page. All right. So we're going to skip this nonsense. We're going to go straight to page 23, which had a nice part as well. And then the last part. Potential use cases. sure. Okay, here we go. I think I went too far. Page 23. Here we go. Nah, crap. That's not what I wanted. Anyway, there was a page saying that Ripple would only hold on to 25% of all the Ripple tokens. Instead, they ended up holding on to like 60 or 65%. So they clearly lied. Anyway, this is
well, we don't need to talk about Ripple. I think everyone on this program knows that they're a complete scam. So
I think we're done. Though I will point out on the very last page, they're basically saying how they expect the value to go up in price. Anyway, the role of XRP. People need to look at this. Just try to find this online. It's possible. Just the Ripple protocol, the deep dive for finance professionals. Find this document and somehow get it in the hands of the SEC, because this has financial fraud written all over it. All right. Can't believe the show's already gone almost an hour. One last insane topic. I know we need to talk more about Bitcoin. The U.S. Post Office, the one that's about to shut down for being broke, decided to put in or got granted a patent. I'm not even sure if it's granted or they filed for a blockchain voting system. Oh, good God. Here we go again. I'm only going to read the abstract and then I'll let Jimmy say a few words. A voting system can use the security of a blockchain and the mail to provide a reliable voting system. A registered voter receives a computer-readable code in the mail and confirms identity and confirms correct ballot information in an election. The system separates the voter identification and votes to ensure vote anonymity and stores votes on a distributed ledger in a blockchain. Can this get any more stupid?
Well, let's see. It's a government employee, a bunch of rent seekers that are creating this to make their superiors happy. It has no practical use whatsoever, and it's probably unworkable and has all sorts of security flaws if implemented. So yeah, it is pretty stupid, but not quite as stupid as the previous story. I think Ripple is still stupider.
All right. So just a heads up, there you go. Let's talk about something that's in the world of Bitcoin. Taproot. Taproot is coming, and Taproot is going to have some awesome features. So in an article by Aaron van Weerdum, payment pools could be Bitcoin's next layer 2 protocol. So this is a neat function of Taproot. And I was reading it, by the way. Click on this right here. Sorry, this right here. The explainer, it's also in the video description if you want to read more about Taproot, which was written over a year ago. So a lot of the stuff takes a little while. So what are these pools? So basically, the pools would let groups of users share ownership of the same coins as recorded on the blockchain, while letting any of these users make or receive payments within them. As the group and its individual members hide in a Taproot structure, all of them enjoy more privacy, smart contract flexibility, and other benefits. And they potentially even enjoy these benefits off-chain, making payment pools a new layer 2 solution. I read this whole article. It's very, very interesting. I'll let Jimmy talk about it, and then I have questions.
Yeah, so if you think about what a pool is, it's you put all your money into a pool, and you have sort of like a separate ledger to say, okay, Alice owns this much, Bob owns this much, Carol owns this much, and so on. And that's basically the idea. And it's done in a way so that it's trustless. So Basically, if you have a pool of 10 Bitcoins and Alice owns 1 and Bob owns 6 and Carol owns 3, something like that, they have something cryptographic to make sure that they have access to 6 at any point. That Bob has access to 6, that Alice can unilaterally withdraw 1, and Carol can unilaterally withdraw 3, and so on. And that's a basic idea. Is you have a separate ledger, which is why they're calling it sort of like a layer 2, because in a sense, all layer 2s are a different accounting system that's on top of the Bitcoin accounting system, which is what we call the blockchain. So it's got some really, really interesting properties. And the main one that I think everyone is interested in is that if you have an output between Alice, Bob, and Carol, or you have a payment pool between those 3, you can't tell who owns those or anything about it, or who owns how much and who's in it. You might be able to tell that Alice has 1 because she sends 1 to somebody, and figure that out. But until it's spent, you have no information. You have very little information about who owns it and so on. And it defeats a lot of the chain analysis that you might normally be able to do, because it's in a pool. So you know what the group is doing, but you don't know who's leaving the group or who's entering the group, and so on. So you might have a situation where Alice gives her coins to Denise or something like that, but you can't tell just by looking at the on chain about it, and that's a really cool thing about it. The thing is, it's not complete yet, and there are pieces that you need in order to make that work. Namely, you need Alice to be able to withdraw her coins unilaterally without any other cooperation. And right now, the way you would have to do that, even if Taproot existed, is by having every other member of the pool pre-sign a bunch of transactions that make that possible. There are some ways around that. I think Jeremy Rubin's proposal for check template verify could potentially make it work, but there's some drawbacks to that too. But that's what this article is talking about. Is you can get some serious privacy using something like payment pools, as long as you group with a lot of people. And if you can do it in a reasonable way and combine and do things like that, you might have basically killer privacy on Bitcoin. And that's what gets me excited about this.
Yeah, so as I was reading this, so obviously this thing has a long way to go before it can actually scale. That's another one of its big drawbacks, is that scaling some of these things is going to be incredibly challenging and difficult.
Well, that's where the check template verify stuff comes in. That might be a way to do it. Or if you have like 10,000 users, you have to sign like 10,000 times. That could work. It's just a lot of data to keep, and if you lose any of it, then you can't do it anymore, and things like that. So it gets very complex, and that's the part that's more difficult than necessarily like scaling, is figuring out like a reasonable way to do it so that it isn't so complex. It becomes simpler to reason about, and that's very important from sort of like a programmer's perspective, because if it gets too complicated to think about, stuff like what happened to Yam happens, and that's not where you want to go.
Right. And the article does give a lot of specific examples of what can be done, and I do think that the best privacy part in here is if you have a bunch of people in one of these pools. Let's say it's you, let's say it's the people in the show, you, me, Giacomo, Christine, Leah. Once we all put some Bitcoin into the pool, we can all move it between each other without it actually being registered on the blockchain until one of us takes it out. And
yeah, and you could do some really cool things with it, like you can have a lightning channel that comes off of this, and that way no one knows who opened the channel or anything. It could be anybody in the pool and so on.
Yeah.
And you can settle and like net it out, and it interacts with Lightning in a very interesting way.
Yeah. So it does have amazing features, but here's what I found like kind of funny as I was reading it. So another way they're saying you can create privacy. Let's say Alice is buying a car. So the concept is Alex put in 3 Bitcoin, Bob put in 2, and Carol put in 1 into a pool of 6 Bitcoin. So let's say Alice wants to buy a car, and the car is going to cost her 1 Bitcoin. By the time we actually get Taproot, that's going to be very probably reasonable that 1 Bitcoin will buy you a decent car.
I mean, you could do that now as long as it's a used car. 12,000.
Yeah. You could be able to buy a Tesla with 1 Bitcoin. But by the time this is operational, you might be able to buy a Tesla with that Bitcoin, which is fine. I'd rather have them get it done right than fast. So Carol decides to send 1 Bitcoin to buy to the car dealership to buy the car, and sends the remaining 5 coins to a new payment pool. But in that payment pool, now Alice has 2 Bitcoin, Bob has 2 Bitcoin, and Carol has 1 Bitcoin. So it was just funny as I was reading it. It's like, well, this is privacy because now it looks like Carol paid 1 Bitcoin for a car and she still has 5 Bitcoins. But in reality, other people have a claim to that Bitcoin. That's not exactly how I want to use this. Like the last thing you want is to be potentially held liable for coins that other people have. So usually the goal is to show as little Bitcoin that you have, not to, have a UTXO set on the back end showing that you have 800 Bitcoin. Where you're trying to spend, half a Bitcoin. So I would love to see this work in the opposite direction. I'm not sure where this would be useful, where it looks like you have, let's say 100 Bitcoin that you don't actually have. Other than I can think of one example. And when I was younger, back in the old days, when we used to write down phone numbers, I met this guy once. I knew him. So what he did was, you might laugh at this, Jimmy, so might our audience. So he would always hang around like bank ATM and like even look through like the garbage can and like by the bank ATM machines to try and find ATM receipts with the maximum amount of money on the receipt in your account. And then he would hold down to those papers, and he would, whenever he would have to give his phone number to a girl, he would like take one of those out of his pocket, and on the back side, he would write his phone number. If a girl gets home and flips it around, there's like $200,000 in the bank account.
Nice. What a nice, interesting way to get the girl intrigued, I guess.
So
a little deceptive, but that's I guess what people are doing. But yeah, the thing about this scenario though is that that's assuming that assuming everyone else is using the old way of transferring money. Once a lot more people are in payment pools, then it sort of hides itself. At that point, it's like, well, these 10,000 Bitcoin moved. And I paid, 0.01 Bitcoin out of it, but actually, like none of that happened, right? Like it's obvious I don't have 10,000 Bitcoin, and that's I think that sort of thing will be a lot more common, and yeah, it'll be interesting to see if, especially if you combine it with something like check template verify, it looks like a normal split transaction, like 5,000, 5,000, something like that, but you actually paid 0.01, and the other person can get it whenever they want, but it's they have to do additional split transactions in order to get it.
All right, and finally, before we take a look at the mempool, we have the following tweeted out by our very own Mr. NVK, Mr. Novak, and it is a clip of Warren Buffett suddenly realizing at the age of 103 that negative interest rates and inflation might be bad. So let's go ahead and have a listen.
you better own equities, or you better own something other than debt. I mean, it
Okay, what's going on?
I don't know. Your video stopped.
It's remarkable what's happened in the last 10 years. I've been wrong in thinking that you could really have the developments you've had without inflation taking hold. But we have 120 odd billion. Well, we have some almost very high percentage in treasury bills, some in other, and some just in cash. But those treasury bills are paying us virtually nothing. Now, they're a terrible investment over time, but they are the one thing that when opportunity arises, it will arise at a time, and maybe the only thing you can look to pay for those opportunities is the treasury bills you have. I mean, the rest of the world may have stopped. And we also need them to be sure that we can pay the liabilities we have in terms of policyholders over time. And we take that very seriously. So if the world turns into a world where you can issue more and more money and have negative interest rates over time, I'd have to see it to believe it, but I've seen a little bit of it. I've been surprised. So I've been wrong so far. I do not think that.
I think this is the best part coming up right now.
I don't see how you can create. I would say this: if you can have negative interest rates and pour out money and incur more and more debt relative to productive capacity, you'd think the world would have discovered it in the first couple thousand years rather than just coming on it now. But we will see.
Yeah, that was interesting.
Yeah, I mean, he's saying what every Austrian economist has been saying for a long time, which is that there's something really off about the current monetary system, that, you know, like printing money and having the central banking system do what it's doing is not necessarily a good thing. And you know, I think Buffett has been sort of expecting some level of inflation, but it hasn't hit. So he's wondering what's going on. It's weird because you know, everyone looks to him as a guru, thinking that he knows way more like about everything in life because he's made a lot of money. But honestly, a lot of the money that he's made is because he's close to the money, right? He's invested in a lot of banks and things like that, insurance companies, you know, stuff that gets access to the newly printed money. So I'm not sure he even recognizes that he's made most of his money by, you know, being close to the money printer. But that's essentially what he's coming to the realization. Okay, I don't understand any of this stuff, and that's what he's basically saying. Though, you know, he didn't exactly put it in that way. But I mean, some humility from him, I think, is good and warranted. Maybe he goes down the Bitcoin rabbit hole, but yeah, this is the first step that everyone sees.
Well, I would just like to add that Bitcoin showed up just in time, right after the last financial crisis. And when this shit blows up, scalability and privacy will be there.
I wonder what's going on. Why is it saying it was mined 13 hours ago?
What do you mean?
The block, the last block. Oh, it says 10 minutes ago there, but 13 hours ago below. I bet you that's a little bug or something.
Oh.
Yeah, I'm not sure what's going on. Or it hasn't, this hasn't updated for a while because the block numbers are different. Okay. Yeah. All right. So if you want to get in on the next block, you're unfortunately going to have to.
We just found it.
Okay. All right. So if you want to get in on the next block, 20 to 30 will happen.
Unfortunately. Yeah, go ahead. Go ahead,
yeah.
Jimmy.
Yeah, 20 to 30 will get you in the
No,
next,
you see, I don't think it will. I think it's saying 20 right now. Mm-hmm. But man, by the time that block gets there, unless that block is found immediately, if we hang out here another 3-4 minutes, this thing is going to be upwards of 40, 50.
Well, the thing is, it tends to slow down right around now, just the number of new transactions, and those are the ones that raise the value, right? Like if you have a lot of new transactions coming in by people that are desperate to get it in the next block, those are the ones that actually raise the fee.
Yeah.
I mean, right around now is when it starts to slow down anyway, so that's why I say
I know, but look,
20 to 30.
here's what's bothering me, Jimmy. The block after the current block almost has the same sats per byte, which means
Yeah,
that
so I mean, the graph will tell you a little bit
which means
more.
this is about to go up drastically.
I don't think so. I really don't think that'll happen. So go to the 1 week view, and okay. So this is what happens after any weekend. Is we're Tuesday, Monday, and Tuesday. This is normal. This is completely what happens. Is a lot. I guess the price action over the weekend caused a lot more withdrawals and stuff like that, which is why we have
volatility today, which probably didn't help.
Yeah, but I mean, I think like we'll start clearing a lot of this stuff overnight. Although a lot of it cleared yesterday, so last night. Although it looks a little bigger today, but the price also went down. So I suspect that we'll clear down to maybe 5 or 6 Satoshi per byte overnight. But yeah, I mean, a lot of the green is not there anymore. A lot of that is starting to clear. A lot of this is left over from the last couple of days. Like just because they're close together doesn't necessarily mean that there's a lot of demand right now. It's just it's still stuff from the mempool from the past 2 days that's starting to clear, and as it clears, it'll go down to the next one and so on. I wouldn't be surprised if by the weekend, like it'll certainly clear by the weekend, a lot of this stuff in the mempool.
Hey, Jimmy, I'm not sure what's funnier, the fact that they're using a Bcash logo for Bitcoin testnet, or the fact that they're calling Bcash a testnet. So which one is it?
It's testnet.
It's Bitcoin's testnet.
Yeah.
Okay.
And you could tell because everything's like 1 sat per byte. Yeah.
Oh, that's great.
Yeah.
Which could also be Bcash, right? Because they have no transactions. It's always 1 sat per byte.
And they have no mempool. Now you could tell by how big the blocks are. It's 215 bytes for some of them.
Again, are you sure? If we go to coins.
It's also got 1 million blocks, so that would be the other one. So yeah, BCH has roughly the same number of blocks as Bitcoin.
Hold on, I want to see how big their blocks are. I want to see how big.
Certainly bigger than 215 blocks, Tone. Yeah, so 190 kilobytes, 30 kilobytes. It's not 215 bytes.
Oh, too bad.
No, you had a couple that were 260 bytes and 220 bytes. Those are.
Wait, so when was the last time they had a block that was bigger than a Bitcoin block? Hold on. So
I'm sure sometime today. Who knows? So
our average block size is like, we had a 1.3 just in the last hour. We had a 1.4 megabyte block size. And
I'm guessing in the 1.4 range. Yeah, but I don't know. Let's go down. If you scroll down, you'll see maybe one. No, nothing. You're gonna.
Nope.
Nothing in the last 10 hours.
They had one block that is
over a megabyte.
Over a megabyte. One block.
Yeah.
Jesus.
For this, they burned all the bridges and everything. And look at the version numbers. They're using overt ASIC boost.
They literally have blocks with 1 transaction in them.
Well, that might be the miner actually. That used to happen on Bitcoin too.
All right, fine. 5 transactions in it.
3 transactions.
Three
Yeah,
trans-
it's yeah. I mean, they don't have much volume on their stuff. Why anyone? No one actually like. The irony is, no one actually uses Bitcoin Cash, despite
one
saying
var
it's peer-to-peer cash all the time. Yeah.
one var per byte. That's correct. All right. Jimmy, thank you so much for joining us once again. If you are interested in Jimmy's work, please check out Programming Bitcoin, and he's got a couple of books.
Yeah, Programming Bitcoin and the Little Bitcoin book. Programming Bitcoin is for programmers. Little Bitcoin book is for your pre-coiner and no-coiner friends. Yeah, it's being translated into many different languages, much of which is unfortunately stalled out because of COVID. But yeah, please check it out. They're both available on Amazon.
And then come and see us at BitBlock Boom in Dallas, Texas, a week from this Saturday. All right, guys, just a quick peek at the price. I did a price show this morning. I also restarted my computer, so we're all going to have to patiently wait as these charts.
Holding 12,000 like a champ, huh?
We were holding it. I thought we were going to hold it. We dipped down to about 11.9, 11.8, but we bounced back fairly quick. So here is our weekly chart of Bitcoin, and we are back to holding 12,000. We're at 11,927. That to me is close enough. I think we will hold it. I don't think it's ready for a big correction yet. It is possible, but let's look at the daily chart. It might be a little bit cleaner. Today is only Tuesday, so looking at the weekly chart is not going to get us very far. I can actually close a bunch of these now. Maybe not that one. All right, let's see if this frees up some memory.
Wow, you really need a new computer, huh?
Yeah, I need to close some tabs because on my other because I'm writing an article and I have like 40 references open that I need, and like 8 of them are yours that I need to write that article. I still need to read half of them, and then I need to write the article, and then I need to make a presentation about the article for BitBlock Boom. So I'm not
that's what's taking forever.
So I'm not gonna have a very enjoyable next 10 days because my writing speed is let's not discuss that. It's worse than my reading speed. So we did pull back to the breakout area of 12,000, and I think that's a good area for us to try and challenge the full realization of the triangle goal of around 13,200 and potentially as high as 14,000 before a more severe pullback. So I actually remain optimistic here about the price. I will no longer be optimistic if the price drops to below, say, 10.8. If we start making new lows tomorrow, I will then no longer be as optimistic. If this 4-hour chart loads, I can go ahead and take a look. I'm not even going to pull up the S&P 500, which I believe made a new high. But here's our 4-hour chart. I just want to see where my lines are. And so far, we are holding this area of the original breakout area, which is decent for a pullback. In a perfect world, we would already be above 12,000, making me more comfortable. But as long as we stay above 11.4, I don't think there is that much of a concern. This CMF definitely crashed real quick. All these metrics are actually bearish on a 4-hour chart, but I'm not going to pass judgment yet. But if I wake up tomorrow and the price is sitting at like 11.7, I will then be a little more bearish than I am right now for obvious reasons. But I like to buy strength and sell weakness. We had the breakout strength. We had the pullback. I would be a buyer at above 12.1, and I would be taking my stop losses below. So these are your most recent highs and lows in the last 24 hours. You have well, the last 16 hours. You have the 12,100, that's the high, and you have 11,800, that's the low. So below 11,800, I'm cautious. Above 12,100, I'm risk on. That's basically my view going into the night. All right, guys, that is it. Please support UntitledVays.com with the affiliate page, and see some of you in Dallas, Texas at the end of the month. All right, I'm done. Jimmy, thank you for joining me. It is late in the evening in the US, and I may or may not see you guys tomorrow. I'm not sure.
All right, well, fiat delenda est. This song is done.